everybody. Today is Monday, October the 7th, 2024, and I am John Blank, Zacks Chief Equity Strategist and Economist. And today we're going to go through our top stocks, our top large cap stocks in the highly ranked top 20% aerospace and defense industry. I will also touch on the sad tale of Boeing and its suppliers. So mostly a happy story, mostly a strongly ranked industry with a sad tale buried within it that we will also explore. Great subject today, very timely in light of the rising appetite for commercial air travel and the rising appetite for military air equipment, drones, planes, missiles, and all other types of things. So first off, let's do our disclosures. Today's views are mine. I do have a PhD, and they're not necessarily the views of Zacks Investment Research. Okay, so first off, I want to start out with the table that we always have as a resource. And again, the three types of organizations of just one industry, Industry 38, Aerospace and Defense. We've got those ranked by market capitalization, with the 165 billion RTX Corp being the number one stock. You may not know that ticker RTX was Raytheon. It was renamed in July 2023, and it is a merger from the 2020 Raytheon and United Technologies. So keep in mind all of this. And when I said this is a top rated answers, this is what I mean. We're 50 at 252. We're top 20% here on October the 6th. For this industry. So RTX and top 20%, here's how it works. You can see from 4 billion to 165 billion, we've got lots of big stocks to talk about. And most of these names you probably know quite well. Most of these, Northrop Grumman, General Dynamics, Boeing, of course, here at 94 billion now. Over here, we've got the top stocks by largest 1 month change in the forward earnings estimate. This will be the Zacks Rank. So here we'll find the ones that are getting some love from the analysts currently in the short term. And over here, we've got, of course, the most covered analysts. So this is your institutional investors type story. So to no surprise, you're going to find some of the names over here, but not always. There are going to be things like Triumph Group, which is a Boeing supplier, and we'll talk about Spirit Aerosystems, which is also a Boeing supplier, and we'll talk about it. So you will notice these over here, but they are not over here because, of course, Boeing is having some trouble. But there are numbers of companies that are very interesting. We can get into that. To start off, let's go through the latest trends and developments in this sector in this age of artificial intelligence. So first off, I want to get to the aerospace sector itself, not aerospace in terms of its defense. Now let's talk about defense and commercial spending. You got to attract, retain, and develop talent for the defense and commercial spending space. Sustainability. You have to reduce the dependence on fossil fuels and lower carbon emissions for planes. Adopt sustainable practices. Engine efficient technologies. Electric flight. Again, electric planes are on the way, people, and it's worth noting. Aerospace operations. Real-time data synchronization, and optimizing manufacturing processes and improve efficiency and productivity at the plant level. Much like the Tesla story, the plant for these operations and making these aircraft and these aircraft engines is very, very important. Manufacturing, of course, rapid development of parts and components, reducing production costs. And remember, a lot of these have to be produced in the country because of the national security implications. Use of novel materials, really interesting story there. Lots of interesting high-tech materials are used here. And these are usually also parts of lightweight components. So obviously making novel materials lighter and stronger is the concept. Immersive technologies. Immersive meaning augmented reality simulations that allow pilots to practice in realistic environments and improve efficiency and enhance learning, and reducing the risk associated with flight operations. So this is basically your virtual flight cockpit. A lot of work going on here. There's all companies that are surrounding here. We'll talk about that. Workforce challenges. Of course, defense spending has priorities, and it does need to foster innovations. And there's investments in what's called AAM and space. AAM is probably not a term you know. So advanced air mobility. AAM is a new aerospace industry sector that integrates automated aircraft into the national airspace system. So much like automotive cars on a freeway will talk to one another, planes will talk to one another in the airspace. And planes that are piloted by actual humans and those that are not piloted by humans will interact. That'll be called advanced air mobility. So in many ways, Garmin was an example of a device company that was started by people who wanted to automate aircraft cockpits, and now it's, of course, in all GPS devices in cars. So this is really a really interesting parallel subject, and in many ways leading subject for all this automation. Keep that in mind as well. Okay, so we're off to the top stocks by market capitalization this morning. Let's do the first off. Forward revenue for the top stocks from this aerospace. So this is forward 12 months. And this is earnings down here, by the way. So we got revenue up here, forward 12 months, and earnings forward 12 months. Really nice chart to check everything out. Just want to point out, of course, COVID really was a huge hit for Boeing. They had to shut production. They had a lot of problems with the MAX. Of course, all the commercial airliners were shut down. This was also true for other groups like EADSY, which is a military group and commercial group in Europe, Lockheed Martin, LMT, because it was more military related. You could see it as contracts that just kind of blew right through it. Boeing was much more commercial. Anybody with any element of commercial operations. Here you've got RTX, that's Raytheon. They did have some commercial operations. Now they're back up above where they used to be. So in most cases, you're going to see with RTX, with EADSY and LMT, you're seeing new highs in revenues. Boeing, no question, not the same story. They're always back. They've lost 12 years of time. Big issue with that company. So over here, though, we've got lots of new names you probably don't know over here. FSS, what a great looking chart there. ITT looking great. IEP not looking so good. MKL actually doing excellent, and BZLFY. These are names you're probably not as aware of. And we'll get back to, again, that first chart here. So for example, BZLFY will be down here somewhere. We will find it and we will say, okay, here we go. Let's see if we can find BZLFY. There's BAES. There's Airbus, EADSY, and I cannot find it. So we've just got to go back and take another look. MKL, let's see if we can find MKL here. And over here, let's take a look for MKL. MKL. So it looks like some of these tickers are actually small cap names. Yeah, I guess this is the case here. Look, they've got the very large cap names and the smaller cap names. So these are the tinier stocks that we don't talk about as much. So you can use this in the Zacks system. Just go over here and type those in and you find out what they are. Now, Lockheed Martin, here is an incredible earnings story. Really a nice story. And here's Boeing comparison. Obviously, Boeing was on track with Lockheed Martin until the pandemic has shot it down. Airbus, not anywhere near the earnings of Lockheed Martin, but now in line with Boeing, not too much worse off. And RTX obviously still recovering itself from that COVID pandemic. Over here, we got TransDigm, Northrop Grumman, General Dynamics, there's BAE, and Rolls-Royce. So again, TransDigm Corporation, you got to love that chart. That's a super looking stock. So here is a really nice entree to the business and how it can be, Lockheed Martin-like, or it can be Boeing-like. And it can be TransDigm Group-like, or it can be Rolls-Royce-like. It really is a business that, it's recovered in partly because it is partly a part business. It's parts military, part commercial. And that is what makes it interesting from a stock owner perspective. All right, return on equity. This is somewhat related. Again, here's Lockheed Martin's ROE. You're going to notice in general, You're going to get ROEs in the 20s and forward PE multiples that are not so different here. So you got return on equity up here. I would just pay attention to these numbers here. You can see that return on equity for Raytheon or RTX now is 11 or 12, and Airbus is about 19. So down here, to no surprise, most of them are going to trade in the 20s, low 20s. Here you get all the low 20s. Of course, this one TDG, TransDigm Group, is in the sweet spot and is at a 46B, so it's a growth stock. Others just kind of staying in the same spot from a PE perspective. Really interesting stuff. All right, free cash flow. Of course, up here, put the Boeing story just to show you, what the shares look like. Yeah, they topple 150. We're in a strike environment now, and you can see all the negative red, all the declining estimates going for any year from 22 to 26. Still haven't turned that ship around. So big issues up in the Boeing space. Free cash flow to net income, not as interesting as cash and cash equivalents. I wanted to show you this. Boeing is actually doing pretty well with their cash. They've got, 12 billion set aside, which is strong. Not as strong as Airbus, but pretty close. And actually much stronger than Raytheon or Lockheed Martin, actually. So Boeing, from a cash perspective, is not in trouble, which is why the stock is holding at 150 level. But you can see, obviously, lots of interesting checks on whether there's cash and cash equivalents in these industry companies. Free cash flow, depreciation and amortization. So this is obviously not as interesting as this. Free cash flow is really interesting. And we've got great stories. There's that Boeing story, real big plunge, then it climbed back up, and then it's back down again. Of course, Lockheed Martin holding up much more steady. BAE actually showing you some nice lift here, and other groups that really have a nice picture for you. General Dynamics looks pretty good. Down here, this is really interesting up here. Okay, total debt reinvestment. Here's total debt and reinvestment rates. So there's the total debt, and here's the reinvestment rates. And you can see, really, I think this is really interesting over here, the Northrop Grumman General Dynamics after the COVID pandemic, there's lower reinvestment rates. Interesting to think about why that is, because of obviously they don't as much ability to recover from that pandemic. But you can see this another way in terms of the debt. TransDigm Group, really interesting story there. They're building more M&A. You can tell that there's a nice M&A story. Boeing, of course, really piled up the debt during this crisis. They went from 11 billion in debt to 60 billion in debt, $50 billion in debt. Crazy situation for them. All right, on to the next one. Top stocks by maximum number of analysts. Okay, so we got lots of stories here. I have 8 great stocks. Things you probably don't know as much about, names that you probably are not as aware of. So CAE, Simulation and Modeling Technologies, Integrated Training Services. So here's basically a flat stop. That's a flight simulator. Kratos, Defense and Security Solutions, including this thing called the Combat Capabilities Development Command, C5ISR in defense terms. This is true defense stock and probably the best chart you've got available right here. Look, this is super nice. Going back to those highs up here, got yourself a nice chart. Nice looking chart for this. So full defense operation here is better than flight simulators. Of course, this is somewhat commercial training pilots. Textron's got some auto businesses in here, so I would not keep that as closely in mind for this industry, although it's a great looking stock. And Eve Holdings is dedicated to accelerating the urban air mobility ecosystem. So this is air taxis in urban environments, obviously negative numbers, but starting to get their act together 25 and 26. So some hope for urban air mobility. Leidos, LDOS, that's going to be here. This is a Delaware-based company that's 50, 60 years old, and it has all kinds of different devices that it's doing, and it is incredible stock. Since 2023 and on. It's really, the story of the military explosion out there. Obviously, this is in Delaware because near DC, and Lydos is tied to that. We have other ones, Excel, SPR, and LHX. Of course, this is a nice looking chart here as well. This one's a little more flat as well as this one. But here and here and here, you've got some really nice stories. And this is just an interesting story to think about. So really nice chart, lots to learn about here, lots to study and understand this business. There are really a lot of things at the company level that are active, and this is what you need to understand from this business. Okay, net margins. Spirit Aerosystems, again, it's the largest independent aircraft part designer with Boeing and Airbus both supply to them. And of course, they have gone down with Boeing. Look at this. Spirit is just tied hand in glove to Boeing, all the red arrows off the 2020 pandemic. Spirit's going to be showing up here, SPR, total debt to capital, doing the same thing that Boeing did over time. It's a sad story here. And there's Boeing. Spirit's net margin is now negative after that big collapse. So it's not just Boeing, it's things like Spirit Aerosystems as well. Textron, really nice story here. Kratos, also very much a flat story, not doing as well in the net margin context. So over here, you get some really nice names like HXL, LHS, and there's LDOS. Obviously, you want private profit margins that are positive here. That would be the best story. CapEx, the depreciation, and net debt, to no surprise, here's your Spirit Aero Systems, like we talked about. A lot of issues there. All right, the Zacks Rank story, last but not least. All right, so what do we have over here? Heico, HEI. Again, 60, 70-year-old thing, jet engine and aircraft component replacement parts. So in a military situation where lots of equipment needs to be repaired, or commercial situation, you definitely like just parts. And of course, these have just taken off. When there's more use of aircraft, there's going to be more use of parts, and you cannot find a better looking chart than this one. Going forward all the way to 2026, I would only point out it's all priced in to 2026, like you see in many, many stocks. Here's HEI, the price to free cash flow. Of course, it's very high in the 61 area, and you got other names that are down in the 13 and 18 and 27 area. So a lot of different stories to look at from a valuation perspective. Here is HEI, enterprise value to sales, in a 9 versus anything from a 1 to a 9. So again, you're going to buy the growth, you're going to pay up for it. That's what I showed you over here. But lots of interesting stuff to pick up. And now, of course, we put on your radar Heico, ticker HEI. Standard deviation charts. Just want to point out, again, we've got TDG here doing a lot of big upgrades. And here's another one, standard deviation of the forward second year end estimate. Here's the forward one. And of course, TDG stands out. There's TDG here and TDG there. So lots of movement. What do? Highly engineered aircraft components for nearly all commercial and military. Again, components like Heico. And you can look through this long list of things that they do. But of course, since the Ukraine war and since the opening of after the pandemic, this is exactly what you're looking for. TransDigm Group, really a classic growth story. And you can see that they're getting those upgrades over here in the standard deviations of their estimates. Okay, cash flow yield, Triumph Group. Uneven production rates, particularly on the Boeing and MAX program, TGI. So flag that one. That is going to be Boeing. Right here's TGI, current ratio, and of course, cash flow yield. Getting better, though. So at some point, maybe Boeing turns around, Spirit and Triumph will turn around. But of course, none of the analysts are expecting that at this point because of the struggles with the Boeing MAX program, now the strike. But cash flow yield, keep it in mind, you've got lots of interesting stories here, and better cash flow yields will give you better stock interest. Price to sales. This is for the entire industry, the overall industry. So price to sales has been starting to go up. It's in the last year and a half. It's been pretty strong. Earnings, of course, because of these struggles that are getting captured by Boeing and its suppliers, you see that they're nowhere near the highs they're used to. They've lost from about 4 to about 2, halved it really. But again, there are lots of industry businesses that are doing quite well. But keep in mind that people aren't paying up for more stuff because earnings are lower. They're thinking the future is going to be better. Hopefully, that's also true for Boeing and its suppliers. Earnings pureness, capital expenditure, enterprise value, and return on capital, of course, related subject, used to be around 13%. Now it's about 7%. So we've been halved since the pandemic. But again, you've got a story that the market likes, and that's going to keep a future alive and much brighter than the current moment. All right. I hope you enjoyed it. Really an interesting subject. What's going on in this aerospace and defense industry, all the different technologies that are emerging, being applied by the component suppliers, by the aircraft makers, by the engine makers, by the trainers, really all across the board. Excellent place to understand. And one step into space is aerospace and defense. So, hold these slides at 866-794-6065. Or send us an email at strategycall@zackspro.com, or find us on the web at www.zackspro.com. I'll repeat this for all of you to get these slides. Obviously, it's information provision. That's what we're here for you, and we need you to get these slides from us so that you can go study them in detail. 866-794-6065. Or send us an email, strategycall@zackspro.com, or find us on the web at www.zackspro.com. Yeah, and of course, we can be found on LinkedIn and Twitter as well. All right, I hope you enjoyed today. I certainly enjoyed doing this, and I think it's been worthwhile.